everybody. How we doing? Thank you for being here. Thank you for hanging out and spending a little bit of time with me. This is going to be another episode of the Trading Quotes playlist. Of course, I'm on Twitter at Big Chads, Bitcoin Live, where I'm a founding analyst, and this is going to my YouTube channel, the Trading Quotes playlist. This is my third book. I've actually published 4 books, which is something I'm really proud of. And I generally try to make my books free. I like to get them out there for people to read them, and I have different playlists. This will go into trading quotes. We're halfway through the book right now, which is great. I've already done a very large part of the book. You can see it here. We're going to do weeks 27 and 28. While you're here, definitely check out the Trading Encyclopedia. They're 3-minute videos designed to teach you professional technical analysis, classical charting, and Japanese candlestick theory. And I've got hundreds of videos here for you to check out. New one every day. I really think you'll like that. Check out the live interviews, long-form interviews, rather. I've been doing a lot of interviews recently. And I do live stream once a week. So check that stuff out. Without further ado, let's jump right into this. Again, this is Trading Quotes. It's available on Amazon. I like to do it free. That's just how I roll. So let's get right into it. We're going to start out with week 27. Monday. Just because you say please, it doesn't mean the market is going to grant your wish. Have a backup plan and stick to it, just in case things do not work out. You know, it's funny. We get into a situation where we're just begging for a bounce. Please hold at support. Please break out. Please reject, whatever the direction of our trade is. And I think that happens when either we've been doing really poorly and we really need a win. We say, please, please this one. And hopefully you're not in that position. That maybe is a time when you take a break. I mean, you should just be dispassionate. You should be executing a thoughtful plan. And then if it doesn't work out, it doesn't work out, right? The idea of the backup plan is critical. That's your stop loss. That's when you say, you know what, it didn't work out and I was wrong. And so I'm going to move on. I'm going to try something else. So, don't rely on the fact that just because you say please, it's not really going to do much. And it probably means that you're overexposed or you've just set yourself up not in a good way. So have a backup plan and stick to it. That's critical. Define your risk. All right. Tuesday, if your entry sucks, you're going to play catch up the whole time and you will probably make more mistakes. Focus on low ball entries to make things easier on yourself. This has saved me a lot throughout the years. I like to say I'm not a great trader. I'm just disciplined and I like a bargain. I really do. I like to wait for price interaction with key levels. You'll find that, especially in well-defined sideways ranges, you can get in a lot of trouble playing that chop in the middle. And if your entry sucks, what that means is maybe you were too impatient and you entered before the price was at a key level. Now you're going to get chopped out. Now it's going to be much harder to define your risk. You're going to be playing catch up. You're probably going to make more mistakes. And it really does start with the entry. That's why it's so important to start light, to scale in, have smaller positions when you're beginning. And I think most importantly, wait for price interaction with a key level. That's a concept I talk about a lot, and that's really going to help you out. Low ball bids are price levels that are so low you don't think the price has a chance to go there, but it might get there like after a volatility event or some big flush, and all of a sudden now you have a really nice entry that's much easier to manage. So just be way, way more frugal, and it's going to help you out in the long run. All right. Wednesday. Some of my worst trades come late at night, staring at my phone as I wind down in bed. So you're in bed, you've been trading all day, and you know it's time to go to bed, but you just can't give it up. You can't take your focus away from the market, and you're just still looking, and I'll just add a couple more here. I'll add a couple more there. These are just quick. These are unserious trades because number one, you're not going to be able to manage them. You're about to go to bed. So what's the point, right? Number one. Number two, these new trades you're opening might cause you to lose sleep. You may enter one of these trades and now you're not going to go to bed because you want to watch it, right? You're casually entering trades from your phone rather than from your workstation, rather than, from a big screen where you're planning things out and you're trading, rather than sleeping. So just be really careful. It's the same thing with like trading, from the bathroom. You're sitting on the toilet. You probably shouldn't be doing it. You're bored. That's why, I'll just squeeze in a trade here real quick while I squeeze one out, right? Not a great idea. So this is just something I've observed, and maybe you have too. Thursday, there are so many things that can go wrong and just make you want to give up trading. Most of them, they come after breaking basic rules, like always using a stop loss and never risking more than 3% of your bankroll in one trade. You may have different rules. Of course, these are just sample ones. In poker, bankroll management is critical. Same in trading. You want to really never risk more than just a very small percentage of your portfolio in any given trade, because any given trade can go against you badly. It can go against you quickly. So these basic rules, first of all, using a stop loss is incredibly important. And a stop loss can be many, many things, of course, but thematically, it's when your trading idea fails. That's the stop loss. That's, okay, my idea has become invalidated, and the mechanics of how you confirm it, depend on your confirmation method, 4-hour close daily, all that good stuff. Stick to these basic trading rules. These are critical. They're going to help you survive. And you want to just do your best not to deviate from them, okay? You can play around and figure out what exact percentage and what your methodology is, but once you've come up with these guardrails for yourself, make sure that you stick to them. Friday, gentle reminder that bottoms are slow to form and they will often give you multiple bites at the apple. Trends usually turn around slowly. You can think about the concept of like a cruise ship or a big ocean liner. It's not going to turn around 360, it's not going to turn around 180 very quickly. 180 is a turnaround. It's got to slowly turn. And the same thing is true with a trend. You'll see that red light go orange. All of a sudden it's going to break a descending supply trend, and then it might move around for a while and then eventually break a lower high. It takes time. You often will get a chance on the trend break. You get a chance on the lower high. You can get a chance on the throwback or the retest. You're going to often get multiple bites at the apple. Now, again, it's not about nailing the nut bottom, right? It's about identifying when the trend is turned around and riding on board that new trend. So oftentimes these bottoms are slow to form. Same with tops, right? And they're going to give you multiple bites at the apple. So don't rush, okay? Saturday, sell when you're excited, buy when you are scared, and do nothing when you are bored. This is one of my favorite quotes, and it's one of my most popular ones. People really like this. They relate to it. Emotional management is critical. Trading journal, using one will help you. I have one available. I have free version on my YouTube, of course. But when you're excited, it's probably because you had a trading idea and it's played out well, and now you're up big in profit, and you're kind of the big green number is enchanting you, and you're really excited. Maybe you should take some profit, right? Because there's been a big move. Buy when you're scared. Well, you're scared because the market has faced pressure, and people around you maybe are scared as well. There's a contagion even of fear. So there might be some opportunity. Very possibly price, is revisiting an important support level, for example. And do nothing when you are bored. I talked about trading in the toilet and at night in bed. Boredom trading can be just devastating for your bankroll. So you really want to be aware of these 3 states. And just maybe even print this out, put it on the wall. This will help you out a lot. This is a big, big, big time quote, okay? Sunday, trading is like dating. If you keep making the same mistakes, why would you expect any different results? The whole thing of the definition of insanity, doing the same thing, over and over again, expecting different results. And, many things are like trading. I use dating as an example, but if you keep making the same mistakes, you won't be able to find a romantic partner, or you won't be able to keep one, you won't be able to be happy. And, you know, rather than repeating mistakes, look at them individually as every mistake's an opportunity for you to learn a lesson, for you to digest what went wrong. You can break it down, get back the residue, right, of that failed trade, and hopefully next time adjust your approach a little bit. So it's just like dating. You want to make sure you're not repeating your mistakes, be mindful of them, and make these subtle adjustments as you're going along. All right. This is week 27. We are doing Trading Quotes, my third book. I'm doing the entire book for free. One day at a time. We're doing, and now we're on week 28. Hopefully you folks are enjoying this, and thank you for being here. Week 28, Monday. Whatever you trade, just make sure it comes from your watch list rather than from someone else's tweet or chat room message. I have an earlier quote: you want to be a rock and not a blade of grass blowing in the wind, right? You're just being so easily affected by other people's words. You're being, you're that blade of grass being blown by the wind. When you trade, it should come from a well-curated watch list. 10, 15 plays that you've studied, you have muscle memory on these charts. You can contextualize volatility. You understand the major support and resistance levels. Make sure you're trading your watch list. Be really careful and just really try to avoid, someone mentioned something in a Discord or a Telegram and I'm going to go try it out. No. Go study it. Yeah, go watch the chart for a few days, for a week or two, and then get a feel for it. And then, maybe then you're positioned and you can take advantage of volatility if it comes. But just make sure it comes from your watch list, okay, folks? Tuesday, in bottoming situations, most of the time, I lose money throwing in bids before any type of reversal pattern has started to form. Wait for things to settle down and identify a solid idea that you can use as your failure point. A couple things to break down here. Well, this is like the earlier quote, a bottom's taking time to form. You may think it's due to bottom. It's got to be bottoming here. I feel, like a bottom is coming. But that can be dangerous because it can continue to bleed, especially on a lower time frame. So if you're just throwing in a bid, absent any price structure, it's not going to work out. You don't even have, a spring, basically, a false breakdown and recapture. You can use that to structure some risk, or even like a low time frame double bottom, or just something to allow you to use a failure point, right? When you have the spring, your failure point is that level you've recaptured. Same with like a double bottom. You break the peak of it. Let the price settle down and let the price structure give you just something reasonable to define your risk. And that's so incredibly important, okay? Wednesday, stick with what's working rather than getting cute and trying to play some trash. What does that mean, cute? Well, stick with what's working. What does that mean? Well, follow relative strength, right? Find the strongest charts in uptrends and wait for them to dip and then target those charts. Don't target some garbage chart that you think should bounce, should be higher, it's due. Oh, they're going to rotate into this one. That's so hard to predict. Just play strength, follow strong charts, play those strong charts if you're looking to long, and just make things easier on yourself and just don't play this random trash. Charts are bad for a reason. The market's decided that it doesn't like it. And who are you to argue with the market? Thursday, the best traders will admit that they have no idea what's going to happen next. Treat anyone who claims otherwise with a degree of skepticism. So, there are definitely times where I have a pretty good feel for what's about to happen in the short term, and I'll put out those calls. And they'll be wrong. But I'm always trying my best. Generally, though, I try to make it clear I really don't know what's going to happen. I just have a good guess. And you want to be careful with anyone who says, I know what's going to happen. I am definitely know what's going to happen, right? We have a good idea, but we know that there's a lot of variables, so you need to remain open-minded. And the skepticism is important. It's important to just be confident in your ability to adapt with whatever the market gives you. Have a good plan, but adjust when you get new information. And just be careful following people who are just convinced they know what's going to happen. And maybe I do this from time to time, and maybe I should be more careful too. So this is definitely an interesting one. Friday. Lack of volume, it's not necessarily a bad thing because a trend does not need expanding volume to continue. In addition, almost every consolidation pattern will start out with high volume and then trail off until it completes. There's two things here. Starting out with lack of volume. When you have an uptrend, for example, you have an imbalance in supply and demand, right? What does that mean? Well, you have more buyers than sellers. You have more demand than supply. That's what's pushing the price up. And you generally will get the most volume at the top and the bottom of a move when you have a battle between bulls and bears and the price trend is challenged. All right. So you don't need volume to continue. Volume is good to have on a breakout, for example, but you don't need volume to continue. And then consolidation patterns like a bull flag or anything like that, you get the most volume on the initial expansion, and then the price will start to slowly consolidate and volume will trail down within the consolidation range, and then it will pick up normally when the price breaks out of that range. That is completely normal. I have videos on this. Moving average, volume basics in the Trading Encyclopedia. Definitely check it out, okay? This is a very important concept, and a lot of people get this one wrong. Saturday. If selling were as easy as buying, we would all be retired by now. It's so true. Why is selling harder? Well, buying is really easy because when you buy, when you open up a new position, you can imagine this is the one, this position is going to make me $1 million. Maybe not that much, but this position, it's going to make me 1,000 or whatever it is, 100, whatever you're imagining. It's very easy to buy because it could potentially, you're like, this could work out great. When you're selling, a lot of the time you're defining your risk, you're taking a loss, you're closing it out. It's finite. It's so much harder to do, especially when it's admitting you made a mistake. When you open up a trade, it's not admitting you made a mistake. You're trying something out. You're attempting to make money. When you sell, it's finite. I screwed up, or okay, I did well, and I'm going to take some profit. Even when you didn't screw up, it's hard to sell because you think, well, it could be worth more in the future. Why sell now? So if selling were as easy as buying, we would all be retired. We would have taken profit in our winners, and we would have cut our losers. It would be so easy. Sunday, without a doubt, one of my worst trading habits is loose play after a big win. This is so hard. When you score a big win, you feel invincible. You feel like you really have it figured out. You're untouchable. What happens? You just forego all your risk management practices. You open up a 150x trade, or you buy without using a stop loss, or you don't even look at the chart, or you just think, hey, I got this. And you end up registering a huge win. And my biggest losses come after my biggest wins all the time. So you got to be really careful of this. Be careful of the overconfidence that comes from this, and maybe even have smaller positions. Maybe get even stricter after a big win, knowing that you're likely to be more risky and you want to counteract that. So this is weeks 27 and week 28. This is part of my trading quotes, a daily dose of trading wisdom book. I published this in 2022. It's available on Amazon. I'm making the entire book free in my YouTube channel, which is Ched's Trading. Check out that playlist. Check out the long form interview series. Check out my quick market updates. I live stream once a week. I'm going to do one later today. And then Trading Encyclopedia, 3-minute videos teaching you TA. This is your resource library. If you ever want to look up a candlestick, a pattern, a trading concept, I hopefully have it all here for you. Look, already 260 videos, new ones coming out every day. So check that out. I'm of course on Twitter at Big Cheds and Bitcoin Live, where I'm a proud founding analyst. So folks, thanks for hanging out here with me. I really appreciate you. I hope you have enjoyed Trading Quotes, a daily dose of trading wisdom. And I'll be back with another video soon. Let's finish up with a little bit of dancing, and then we'll go from there. So let's do this. Thank you.